Hi guys, so today I'm actually gonna be sharing about this business. Alright, it's called Infosys, sticker symbol INFY. Alright, right here. This is a company that is actually listed in India first, and then it has a ADR listing in the US market. So it's actually a foreign company, and that's why it's called the ADR. Right now, a bit about its business. So its business is in the consulting technology outsourcing services, right, in North America, Europe, and India, and also internationally. So it's like an IT company. Okay, it does a lot of application development and supporting the websites. Okay, a lot of the back end systems and licensing and systems. It does a whole suite of IT services. So they actually have four main products and services. So actually the first one is called Finacle. It's a banking solution. All right, now each suite is actually programs that will help businesses enhance their business value. Is another suite of IT services. They also have the more futuristic one called the Infosys NIA, which is an artificial intelligence platform. So there's AI, which is the more future kind of IT. It's for automation. And McCamish is like an insurance platform. Now also it's actually kind of it's actually very big business. It's the second largest Indian IT company. All right. Now, after running through this stock through our calculator, we can actually get a confidence rating of 7.9. From the growth aspect, its intrinsic value is 7.9, so that's about let's take it as $8. The stock now, as I'm doing this webinar today, is at $11. Okay, plus a bit. Okay, just a bit past its previous earnings. It's actually smashed earnings. It did pretty well, and that's why the stock actually went up about 10%. All right. Okay, so you can see that this company is a large cap, $45.2 billion. Okay, that's why it is the largest, second largest Indian company. P ratio is quite fair at 20. PG is slightly overvalued at 2.6. We are looking for companies that's below PEG of a ratio of 1. Its dividend yield is quite decent. If you're holding the company, it gives 2.3%, and based on its assets, it's $1.70, but its price to book is $4.95. Okay. So the past 5 years of this company had been actually very good. Ideally, we're looking at 10 years, but this calculator gives us the past 5 years. Now later I'll show you the 10 years. But in terms of this calculator, we can see that everything is almost quite good in terms of the financials, except that gross profit margin is actually slightly lower than 40 at 34.6, and operating margins are actually quite good, 22%. We're looking at above 20%. Okay, and the rest are quite fantastic. This company actually has no debt at all, so that's another bonus point. Okay, and let's see, the past 10 years of its of its revenue, has been increasing a lot. It's almost like 2.2 to 3, right? 2 to 3 times in the past 10 years. Okay, and gross margins had not been doing very well, but operating margin also not doing very well, but earnings per share has been going up. Okay, so earnings per share, due to the huge increase in the sales, it has went up quite a lot. Its dividends wise also went up quite a lot. Its payout ratio is still pretty consistent because only recently, in 2019, they actually increased to this 65% payout ratio. So it's a good sign, because companies that are growing, they're actually growing. Okay, this company, even though it's very big, but in terms of in the US and all over the world, is actually considered to be still expanding. Okay, so when it actually increases the dividends for a company like this, it's actually a good sign. All right, you compare this to Coke. Coke is actually giving 90% of its earnings every single year, and people are receiving huge investors back then, when Coke is still at a growing stage, if they have invested, wow, their dividend yield will be like crazy, man, right now, because every year they're receiving 90% of the company. So these are giant companies, they can't grow anymore, so that's why they're paying a lot of dividends. But this company has an increasing dividend and it's likely that it's growing, no? Okay, so as you can see, operating cash flow for the past 10 years has been positive, has been growing. That's a very good sign. You have a lot of free cash flow right here. So free cash flow is a very good sign, because what they can do with this free cash is they can increase their shares buyback. Okay, as you can see here, the shares have been pretty consistent, and recently it decreased like a huge sum from 4.5 to 4.3. So it's a 200 million shares that the company has bought back right here. Okay, this is actually, if you check the website, they use this 200 million $2 billion worth of USD, because each share is $10, so it's $2 billion. They just dump it to buy back a lot of shares. So that's very good, because they're actually celebrating listing of their company for 20 years. So that's a 20th year anniversary for the listed company. Okay, so it returns value to shareholders because of the buyback. And you can see that, just to introduce you about some of the company's clients, because it's in the IT industry and it does a whole suite of IT services, including back-end and your licensing and so on. So they have a huge suite of industry that they serve, the range from financial services, insurance, life sciences and healthcare, manufacturing, retail, consumer packaged goods. Basically, these are like if you go Finviz, you go and filter out all these companies, you almost cover the whole market already, So high-tech communications, yeah, except what I can't think of is except commodities. Yeah, they have energy utilities also. So basically anything in the world, any company that requires IT. Nowadays, which company doesn't need IT, right? So they're kind of like the eBigs that we shared previously, but they are much bigger, on a much bigger scale. Look at their clients. They have 25 large, super large contracts, right? These are $100 million plus US dollar contracts. In fact, after the earnings, they increased the number. So the earnings was just announced 2 weeks ago. They actually increased this number to 27 instead of 25 of the very, very large clients. So it's actually quite a good client base, because it's diversified across from large contracts to small contracts. So this is $50 million, this is 10 over million, and just slightly past $1 million plus they have 600 over clients. So total 1.2k clients. That's a huge client base. If you look at one of the core products of Infosys, they actually have this Finacle. So Finacle, when I actually went to research about this, I'm quite excited, because the DBS Digibank that we are all using, they actually runs on this Infosys Finacle platform. Your payments, your iBanking, the one that you use to transfer funds, alright, on your phone, on the com, they are actually run by this back-end system, Finacle. Alright, you can go and Google about it, you can go read up more about it. Alright, so banks, not just DBS, but banks from 78 countries globally, over the world, have been using this software, this platform. The list is actually quite large. If you look at the breakdown, Asia Pacific forms half of it, and then we have the Americans and the Africa, the Middle East, and the Western Europe that forms the others. So some of the other banks we all know that are big banks. Okay, ANZ, a New Zealand Australian bank, Credit Suisse, Emirates, NBD, I don't know pronounce this, sorry. This is actually a French bank, and Zurich, Switzerland, ICICI, Indian Bank, ABN AMRO, Netherlands, Dutch bank right here. So this is actually I'm quite excited at this, alright, for the Finacle. And they also have as I introduced just now, the AI part of its business, where they actually deal with more advanced next gen kind of IT. So some of us in IT, we have read out about it in the news, in some articles we have known advanced machine learning means as you actually use the robot to process your day-to-day operations, they actually learn and they actually improve themselves to help to cope with your operational requirements. So this is the next gen kind of IT where machines can learn themselves. They also help to do analysis of business contracts, and also the management of chatbots. Chatbots nowadays, if you go to any kind of the newer websites, for anything, it could be Policy Pal, it could be some travel websites. They have this chatbot. All right, these are automated replies. Okay, so I won't go much into this because I think most of us would know this chatbot. You type hi, then they will have some kind of reply lah. So yeah, Infosys actually deals with the back end AI behind this chatbot. Okay, sorry. So the next one is Infosys McCamish. This is the insurance arm of the insurance IT. All right, for this business, they actually deal with this. McCamish actually deals with these components are in the back end system of insurance. We have a new business. That means when applications actually come in, when customers apply for insurance, this is considered new business. And policy administration. All right, they deal with existing policies, whatever is needed to help to manage them, where it flows, where the insurance document flows, and then it goes to perhaps the underwriter to assess the case, and then it goes when the customer need to claim, and then it comes back in to claim. So all these kind of back end processes, they provide the IT, the software, the platform behind it. So I shall not go too much into it because it gets very technical, but you just need to know that it actually does a lot. You have to go and read the annual report to actually go and understand really what they actually do if you really want to zoom in into the technicalities. Right now, just give a brief overview. Distribution of the revenue by geography. All right, 60% in the US, North America, and Europe. Okay, the rest of the world, including Asia, actually forms a small percentage. That is actually, I feel, because North America and Europe, they're much more developed, and that's why companies that can afford this kind of IT systems, they are mostly situated in the North America and Europe. Okay, we have India, 2.5%, where the company is situated, where the company is actually found in India. Okay, I see this actually going to grow quite a lot in the near future, because if you know, in the macro economy, there is the four emerging economies in the world. So it's called the BRICS. We have the Brazil, we have the Russia, we have India, and then we have China. These are the tigers that will actually grow very, very quickly in the next decade or in the next 100 years or so. So this is definitely going to grow much bigger. The home country that they are in, and even the Asia, including the rest of the world, I think this would slowly take on the bigger size of the pie, right? Revenue distribution by business segments, as we have seen just now, financial services and insurance, they form the huge bulk of it. The Finacle that they run for the core banking platforms, it is very, very solid, because banks all need this kind of IT software to do nowadays when people actually do digital banking and so on. So the rest are kind of like evenly distributed between these three: retail, communications, and energy utilities. So most of the sectors. They also have the McCamish one, which does with insurance and healthcare, life sciences, that comprises about 6%. So it's pretty diversified kind of company. And if you compare with Infosys, one of the larger, Infosys is the second largest. So who is the largest Indian company? Okay, we have TCS. TCS stands for Tata Consultancy Services. So it's quite, I think in Singapore they also have a branch here lah. It's quite a well-known name. They came to my campus last time to recruit, Tata Consultancy. So I didn't know they are so big until I came to research on Infosys. Okay, now Tata Consultancy, if you compare, TCS on the other hand is actually kind of like a giant already. So they won't be growing a lot. Look at their revenue for the past. This is actually the past 4 quarters. If you compare for trailing 12 months, they did not actually grow a lot, but Infosys actually has been steadily growing still. Okay, you can see the difference in the revenue is actually Tata is like more than 2 times, larger than Infosys. Okay. Now, so comparing its peer group, okay, not just from the largest Indian company, but from what about the other listed companies that actually does with IT services at the back, okay, you can actually see that Infosys is pretty, I would say pretty fair value as compared to the rest at PE 20, alright. This is really overvalued. EPAM Systems at 40, but otherwise some of the other companies, like Accenture, if you look at Accenture, I'm not sure you all know Accenture, Cognizant, these are also big consultancy firms, and that also have a big IT arm. Accenture is so much bigger than Infosys, about 3 times bigger. Alright, it's slightly more overvalued if you compare by PE ratio. As you can see, the net sales, the revenue for Accenture is also a few times more than Infosys. Okay, but I just want to highlight that if you take a deeper look at the net sales compared to the net income, just take a rough look right over here. You can see that Infosys is actually doing the best here, okay, because it takes in 12 billion of net sales, but it keeps 2 billion, so it's about 20% net margin. All right, here you can see 20% net margin. While you compare them to some of the bigger kind of companies that we know, Cognizant, actually, wow, they also make 2 billion, but then their revenue is much higher. So this shows that they're not, their net margin is not as high, they're not as competitive, in terms of the income they actually earn. And you can see Accenture is the worst performing, if you compare it based on this matrix net margin. This is 4 billion, this is 42 billion net income, this is only about 10% net profit margin. So Infosys, despite a smaller market cap compared to the rest, slightly bigger than Cognizant, but it's the best performing net profit margin for a valuation that is not very demanding. Okay, this valuation I think is very fair. If you compare it to these two with the net profit margin, I think Infosys has a lot more room to grow, and by the time it grows, I think this company might be higher valued by investors. Okay, Infosys also, I can see that it has quite a low stock price. And one good thing about having a low stock price is that even if a small portfolio, right, you can be a student that has only $5,000, you can be a young adult that has just started working, you have $10,000 in your account, some of it can actually go into diversifying into IT companies. And if you're looking for a cheap stock price, I'm not saying the stock is cheap based on undervalued, but cheap stock price, and you want to trade options, is only $10. So to trade one contract of options, all you need is $1,000 and $1,070 per contract. Alright, you compare this to Accenture, it's $184. You want to get one contract, you actually need to set aside, $18,000. Alright, I'm not sure if anyone want to put most of their portfolio in a stock like this. If you only have 20k, you're gonna dump everything in this stock, which is not advisable, right? So Cognizant at $63, the cheapest stock is actually Infosys. Alright, if you want, you can actually look into a few more companies. I have this Wipro Limited here, which I actually glanced through. I feel it's not bad. You can do your own due diligence and look for more IT companies to buy into if you're comfortable. Alright, WIT, this also I think is a pretty decent one right over here, on par with Infosys in valuation. This is how I actually find other companies that that's possibly I want to invest in. Alright, when I do this, when I do a main stock analysis, and then I go and look through the other competitors. Alright, now so what else I want to say is that, okay, so Cognizant and Accenture both are actually pretty good also. If you don't mind, if you have a large portfolio, you can actually consider them. They also have no debt. Alright, these two big companies has no debt. very stellar financials. IBM, on the other hand, is also I think we all know the fantastic company. They deal with servers, huge servers for businesses where they keep the database. The only thing is that IBM has quite a high debt. If I'm not wrong, it's about 2 point something debt to equity, so you can go and check it out. All right, but I feel that based on this peer evaluation, I think for me, Infosys is one of the better companies out there to actually put a bit of my money in the IT sector. Okay. All right, so that's all I have. A short 20 minutes sharing with these slides for you guys right here, and I hope you enjoy this presentation, and we'll definitely be talking more about how to trade Infosys in the near future. So stay tuned to our webinars, and cheers.